Coming into the year 2023, we predicted that commitments to net zero plans by companies could be complicated by energy affordability pressures. But an enabling market environment for an energy transition towards more renewables will remain. This would put us in a world not decarbonizing fast enough to be Paris-aligned, but also continued momentum towards a more favorable investment environment for renewables. How has that prediction held? And what have we learned since?
Our nod towards the volatility of energy prices seems to have materialized, as companies like BP have announced in February a delay in their decarbonization plans to better capitalize on favorable oil prices today. As the Russia-Ukraine war persists, concerns around keeping energy affordable and secure have led governments in the US and EU to pursue more conventional fossil fuel projects, like the Biden administration's approval of Willow in Alaska and Europe's investment in liquefied natural gas terminals. Coupled with data emerging that China approved permits to construct over 106 gigawatts worth of coal power just last year, the slight emissions reductions from COVID-related lockdowns are unlikely to hold. Nevertheless, the appetite for adopting more renewables remains great from governments and investors alike. Despite its new coal approvals, China also outpaces the world in new renewable additions. In 2023, China is expected to install more solar energy than the entire portfolio of renewables the US and EU brought online in 2021.
Geopolitical motivations to reshore energy supply chains are also helping create more incentives for renewables in the US and the EU. With the Inflation Reduction Act, the US is targeting its incentives to the energy supply side through an array of tax breaks and incentives that reward green energy producers. The EU is focused on subsidizing the demand side of energy with policies such as REPowerEU, Green Deal Industrial Plan, and the Netzero Act. These policies will help bring long-term certainty to renewables investments and help further build out their commercial viability.